Oil prices just hit a level that has everyone in a panic. We're looking at a world where $110 a barrel is the new reality. Most people see this as a disaster for their gas budget. But if you look closer, there's a massive move happening in the background. Silver is quietly getting ready for something big. Why would energy prices dictate what happens to a precious metal? The connection isn't actually that complicated once you see it. It all starts with how silver is physically pulled out of the earth. Mining is one of the most energy-intensive industries on the planet. You need massive machines to move tons of rock every single day. Those machines don't run on electricity. They run on diesel. When oil stays at these high levels, the cost of producing silver skyrockets. The miners can't just absorb those costs forever. Eventually, the price of the metal has to reflect the cost of getting it. But that's only the beginning of the story. Think about what happens to the global economy when energy is this expensive. Inflation starts to creep into everything we buy. It's not just about the gas station anymore, it's about the grocery store and the shipping costs for every product. When people lose faith in the dollar's purchasing power, they look for a life raft. Silver has been that life raft for thousands of years. It's the affordable alternative to gold for the average person. Right now, the gap between the two is wider than it's been in a long time. Does it make sense for silver to stay low while energy costs explode? Probably not. Look at the industrial demand side of the equation. Silver is a key component in the shift toward green energy. Solar panels require a massive amount of silver to function efficiently. The same goes for electric vehicle components and high-tech electronics. Here's the catch. Higher oil prices make traditional energy much more expensive. That forces governments to push even harder for solar and wind power, which means the demand for silver is being squeezed from both sides. On one hand, it's getting harder and more expensive to mine. On the other hand, the world needs more of it than ever before. We are witnessing a supply-demand imbalance that is reaching a breaking point. Have you ever seen a market try to ignore reality for this long? It usually ends with a very sharp move to the upside. The paper markets can only suppress the physical reality for so long. When the vault stocks start to run low, the price has to react. We're already seeing silver inventories at major exchanges drop. Traders are starting to realize that the physical metal is becoming scarce. If you can't find the metal, the price on the screen doesn't matter. This energy shock is the catalyst that finally breaks the dam. $110 oil is essentially a tax on the entire world. It's forcing a reevaluation of every hard asset we own. Silver is sitting right at the center of that storm. And most people are still looking the other way. Most investors are fixated on the price of gold, but the smart money is quietly watching the silver to oil ratio. When energy costs spike this fast, it creates a massive lag in the market. Silver has a history of playing catch-up in a very violent way. Think about the last time we saw an energy crisis like this. The value of hard assets didn't just crawl upward, they exploded. You have to ask yourself why the banks are still shorting this metal. It seems like they're trying to hold back a tidal wave with a wooden fence. The cost of production for a primary silver mine is now hovering near the spot price. That means some miners are barely breaking even right now. If the price stays here, they'll just stop digging. When supply stops, the price has no choice but to go up. But the industrial side of the world can't just stop buying. Samsung, Apple, and Tesla all need silver to keep their lines moving. They don't care if it costs $20 or $50 an ounce. They just need the physical material to make their products work. This creates a massive floor for the price that most people ignore. Now add the retail investor into the mix. People are starting to realize their savings accounts are losing value every month. The average person can't afford a bar of gold easily, but they can buy a few silver coins every payday. This poor man's gold narrative is starting to gain massive traction again. Look at what happens when the public rushes into a small market. The silver market is tiny compared to gold or the S&P 500. It doesn't take much capital to move the needle significantly. $110 oil is the warning shot for the entire financial system. It tells us that cheap resources are a thing of the past. Everything that requires energy to produce is going to get more expensive. Silver is essentially stored energy in a physical form. It took massive amounts of diesel and electricity to refine that metal. When you buy silver, you're basically locking in those energy costs at today's prices. Does that sound like a bad trade when oil is heading toward record highs? The geopolitical situation is only adding fuel to this fire. Major oil-producing nations are pulling back on their exports. That keeps the price of crude artificially high for the foreseeable future. Every day oil stays above $100. The pressure on silver builds. It's like a spring being compressed tighter and tighter. Eventually, the pressure becomes too much for the paper markets to handle. We've seen this pattern repeat throughout history. The energy sector usually leads the way for the metals. Silver is just waiting for its turn to move. Are you watching the physical premiums at the local coin shops? They're already starting to diverge from the spot price on the screen. That's a clear signal that the official price is a fantasy. The real world knows that silver is worth much more. The miners know it, the tech companies know it, and the banks know it. They're just hoping you don't figure it out until it's too late. This isn't about a slow climb anymore. We're looking at a potential moonshot triggered by an energy shock. Look at the mining companies that are struggling to stay profitable. They are facing a two-pronged attack from the global economy. Labor costs are rising because workers need more money for basic needs. At the same time, the cost of the fuel to run the trucks is doubled. If a mine can't turn a profit, the mine eventually shuts down. We are seeing a silent contraction in the global supply of silver. Most silver isn't even mined directly, it's a byproduct of other metals. Copper, lead, and zinc mines produce about 70% of the world's silver. When the global economy slows down due to high oil prices, those mines slow down too. That means the accidental silver supply starts to dry up fast. Is the world prepared for a physical silver shortage? The solar industry definitely isn't ready for that kind of shock. They have massive contracts to fulfill for the next decade. They need the silver, regardless of whether it costs $30 or $60. This creates a massive, inelastic demand in the market. It means buyers won't stop buying just because the price goes up. That is exactly the environment you need for a parabolic move. Have you noticed how many countries are trying to move away from the dollar? High energy prices are forcing nations to trade in other currencies. This creates a massive amount of volatility in the foreign exchange markets. Investors hate volatility and uncertainty. They flock to things they can hold in their hands when the screens turn red. Silver is the ultimate chaos hedge for the average person. It's liquid, it's portable, and it has no counterparty risk. $110 oil is the signal that the old system is breaking. It's a sign that the era of easy everything is over. We are moving into a period where hard assets are king. The stock market struggles when energy costs eat into corporate profits. But silver doesn't have a CEO or a balance sheet to worry about. It just exists as a store of value and an industrial necessity. Think about the billions of people in developing nations. They don't have access to sophisticated brokerage accounts. They save their wealth in silver jewelry and small bars. As oil prices drain their local currencies, they move into silver even faster. This is a global phenomenon, not just a North American one. The demand is coming from every corner of the map at once. Meanwhile, the COMEX vaults are showing consistent outflows month after month. The big players are taking delivery of the physical metal. They aren't just trading paper contracts anymore. They want the real thing sitting in their own private vaults. Why would the whales be hoarding silver right now? They see the same energy charts that we are looking at. They know that $110 oil makes silver a bargain at current levels. It's like buying a house for the price of the lumber used to build it. The math just doesn't add up for silver to stay this cheap. The market is currently mispricing the most important metal on Earth. This disconnect is a gift for those who are paying attention, but the window to act is usually much smaller than people think. Once the moonshot begins, the cheap silver disappears instantly. Are you prepared for the day the screen price finally catches up? Most people won't realize the squeeze is happening until the headlines break. By then, the local coin shops will have empty shelves. It has happened before, and it will happen again. The silver market is a tiny room with a very small exit. When everyone tries to run for that door at once, the price gaps up. $110 oil is the smoke that leads to the fire. Energy costs are the foundation of everything we consume. If the foundation gets more expensive, the house has to be revalued. Silver is a critical part of that house. Think about the massive debt loads that governments are carrying. They can't afford to raise interest rates enough to stop this inflation. If they do, they risk a complete collapse of the banking system. So they let inflation run hot while they try to manage the fallout. This is the perfect environment for precious metals. Silver acts as a store of value that cannot be printed. You can't just click a button and create more silver. You have to spend millions on diesel and labor to find it. That cost of production is the ultimate floor for the metal. And right now, that floor is rising faster than the market price. Is it possible the market is just wrong about silver's value? Markets can stay irrational for a long time, but not forever. Physical reality always wins in the end. The reality is that we are running out of cheap energy and cheap silver. The era of abundance is being replaced by an era of scarcity. When things get scarce, people hoard them. Hoarding leads to even higher prices and more panic buying. This is the cycle that leads to a moonshot. $110 oil is just the trigger for the first stage. Once the momentum starts, it's very hard to stop. Look at how many industrial applications are expanding right now. The military-industrial complex uses a massive amount of silver too. Missiles, satellites, and communications gear all require it. They don't care about the price of silver when they're building a defense budget. They will pay whatever it takes to secure their supply chains. This means the big buyers are competing with you for every ounce. Who do you think has deeper pockets in that scenario? The time to prepare is when the market is still quiet. When everyone is complaining about gas prices, you should be looking at silver. The connection is hidden in plain sight. High oil equals high mining costs and high industrial demand. It also equals high inflation and a flight to safety. All roads lead back to the same conclusion. Silver is the most undervalued asset on the board right now. The energy shock is simply the catalyst that reveals the truth. Are you going to wait for the price to hit $50 to pay attention? The smart money is already moving into position. They know that $110 oil changes the math for everything. Don't let the noise of the daily news distract you from the big picture. The silver moonshot is being fueled right now. It's only a matter of time before the countdown ends.